This morning to the EV Energy Taskforce webinar on the encouraging investment in public EV charging in the UK. This is part of Green Infrastructure Week, and we'll be highlighting the technologies that will be used to deliver the biggest gains in our transition to net zero. Zemo Partnership is an official partner of the Green Infrastructure Week, and as conveners of the EV Energy Taskforce, we're holding two webinars during the week, focusing on the output of the Taskforce recent report, Charging the Future Drivers for Success. I'm Jonathan Murray. I'm the Policy and Operations Director at the Zemo Partnership, and I'm also the convener of the EV Energy Taskforce. As awareness and excitement of electric vehicles grows, charging anxiety has replaced range anxiety as a key barrier to EV adoption. Whilst this is partly down to the lack of consumer understanding and misinformation, there's no doubt that future investment into the UK's public charging infrastructure is required. If we're going to give motorists both the means and confidence to switch to electric vehicles and achieve our phase-out targets for internal combustion engines by 2035. In this webinar, we will be exploring the different business models currently used and expected within the charging market, the barriers which these business models are exposed to, and the policy measures to encourage deployment. We will also be looking at how capital investment can be mobilised and potential solutions to encouraging sizable investment in EV charging infrastructure, which is going to be needed over the coming decade. I'm pleased to say I'm joined today by Roy Williamson, who is an independent expert and now chair of Recharge, a Nordic charge point network operator, and by Lauren Palmer, program director, at Green Finance Institute. After we've heard from both of them, there will be an opportunity for Q&As, which you can submit via the chat box at the side of your screen. And we'll be selecting questions to pose to both of them. Now, I'd like to hand over in a moment to our two speakers, just to say a little bit more about them. Roy has huge experience. He led BP in the electric charging and future mobility space by developing a disruptive strategy and delivering through M&A and strategic partners to develop what is now BP Pulse. He's recently been appointed as chairman of Recharge, a leading charge point network operator in the Nordic countries. Roy has been a key member of the EV Energy Taskforce, and Roy will be presenting work coming out of the EV Energy Taskforce encouraging investment in public EV charging in the UK, a report he produced in collaboration with Cenex, Energy Systems Catapult and Green Finance Institute. Also presenting will be Lauren Palmer, Program Director at the Green Finance Institute. Lauren is the Program Director at the Green Financial Institute, where she leads the Coalition for the Decarbonisation of Road Transport. Lauren is also a member of the EV Energy Taskforce Steering Group. Lauren will be presenting the Green Finance Institute's report, Road to Zero, Unlocking Public and Private Capital to Decarbonise Road Transport, which focuses on two key aspects of the road transport decarbonisation challenge: purchasing and leasing of electric vehicles by consumers and accelerating the roll out of electric vehicle charging infrastructure, and how to engage capital in investing in that sector. And it'll be the latter part of that report that she will be focusing on. So with that, I would like to hand over, first of all, to Roy, who will be presenting, and followed by Lauren. So.
Thanks, Jonathan. Hope you can hear me all right. Lauren, can you give me a thumbs up if you can hear me? Good, that's all good. Pleasure to be here, and really good to have the opportunity to have a conversation with you all on how we get private investment in public infrastructure charging accelerated in the UK context. As Jonathan said, my background is with BP and more recently with other charge point operators around the world. I've also worked with private equity and venture capital investors in trying to assess charge point installation opportunities. So I've got a sort of sense and a feel of what people are looking for, what they're not looking for, and also what I think would help attract greater investment in the UK. I think it's important to note that we wrote this report. Lauren, myself, and members from Cenex and RFI got together. Sort of third quarter last year, we published this report, and the pace and scale of change in this market is enormous. So even some of the data that we were considering then now seems somewhat out of date. But I think the principles still apply. And I think the input that the report had, together with a lot of the other work that the Energy Task Force, the EV Task Force, has done, has made quite a significant impact on the government strategy that was published last month before. And you can see that in some of the actions that have come out. So we're just going to walk you through, between Lauren and I, we're going to walk you through a perspective on how we see investors viewing this market, what we see as the big barriers. GFI did a very good survey of its members and to understand what barriers and opportunities they saw in the charging space. And just to give you a perspective of what we think might be some of the solutions, some of which have already been adopted by government, at least in principle, and some of which we still need to persuade. So that's the plan. We'll talk for probably half an hour, 40 minutes between us, and then open up for Q&A. So that, just setting the scene, and we've all got a different set of numbers for the number of EVs and the number of charge points. Back last year, the Energy Systems Catapult was projecting 11 million electric vehicles in the UK by 2030. And that might require somewhere in the region of 1 million or so public charge points, and somewhere in the kind of 10 million plus, 15 million plus private charge points, i.e. home chargers. Those numbers, and the important thing about those numbers is not just the absolute numbers of public charge points. We're going to focus this conversation entirely on public charge points. It's the mix of those that is really important. The mix between high-powered chargers at one end of the spectrum and local residential, potentially 3 kilowatt, maybe 7 kilowatt chargers at the other end of the spectrum. Very different investment theses behind those. Very different delivery to the customer and the consumer, very different use cases required in each of those cases. So when one hears of figures like, I think the government was saying 300,000 charge points by 2030, there's a lot of apples and pears in those numbers, and it's very dangerous to think about it in complete, because the cost of a 150 kilowatt charger is 20x the cost of a 3 kilowatt or a 7 kilowatt charger. So you just got to think about it in those terms. So if we move to the next slide, I'm not in charge of the slides here, so I'm going to call the progression of them. When one talks to investors, when one thinks about how to drive accelerated investment in the UK, that we'll come to returns, and obviously the returns are really important, but the risk profile in this sort of market is probably more important than in many other infrastructure markets. Why? Because of the nascency and the stage of development of the market itself. So EV charging is growing rapidly, we know that, but it's also very early in its development, and the steepness of the curve is alarming to some investors. And those risks have been kind of the type of risks that are of most concern are laid out here. And if I just go very briefly left to right, technology risk, when one talks to venture capitalists at one end of the scale, they expect technology risk, they price technology risk in, they look for higher returns, they look for bigger exits, but they also expect a higher degree of failure. As you move up through to more private equity type corporate investors and then infrastructure investors, the risk appetite reduces dramatically, and the expectation that, first of all, the technology is proven and not in question, the expectation of that changes dramatically. So, and we're at that stage in the EV charging market where I think we've got through the initial technology risk was, are EVs going to exist, or is it going to be continued efficiency of ICE engines, or is it going to be hydrogen that actually takes over above EVs? Now that conversation is long gone, or at least gone, and there is a recognition that the risk in terms of EV adoption is relatively low as a technology risk. But there are other risks involved here. Technology, what sort of hardware is going to be required? What sort of software is going to be required? Should we invest today ahead of the curve? Should we wait until all of this is sorted? Now, many of those questions, the kind of CHAdeMO CCS question is pretty much resolved for the UK. And many of the other protocols have now been adopted that mean that technology risk is reduced significantly, and I think investors are now feeling much more comfortable with that. On the demand risk, this is, are customers going to turn up? And again, if you're a venture capitalist, you look at product market fit and you go, yes, well, there's a market there and there's a product there, so roughly it looks all right. If you're an infrastructure investor, you're saying, what contracted demand can I guarantee that at least covers the baseline of my ROI requirement? So if you think about the difference in approach is pretty significant. And when it comes to EV infrastructure, the demand side risk is probably the one that is most concerning for investors at the right-hand side of that spectrum today. Now, that can be mitigated. Lauren will talk a little bit about how we might do that, but obviously fleets and contracted fleets are one way of doing that. The sheer volume of EVs, frankly, that are coming onto the market are another mitigation to demand side risk. So I think, again, we're seeing that improving over time. Policy risk is always going to be there. This is either a change of government or a change of policy, and a set of assertions that one makes when one's putting an investment thesis together are suddenly undermined by new pricing regulations or new payment regulations or new technology requirements, which are much more costly than previous assumptions. So, and again, I think the government now has laid out its hypotheses in this space and laid out a pretty clear set of for its direction of travel. And I think in the UK, the policy risk is now at an acceptable level for most investors. Operating risk, again, was a big issue. It still is a big issue for many. If you look at the uptime in the UK of chargers, and those of us with EVs will know this to our cost, there is a huge problem with the effectiveness of chargers, the reliability of chargers. And that's all about, can the charge point operators operate these things? Can the EMSPs interface with this hardware in a really effective way? And that risk still exists. But again, I think the more modern equipment and the new software availability is solving a lot of those problems. And the uptimes are gradually creeping upwards to a point where they're getting close to what the benchmark would be, which would probably be fueling availability in petrol stations, which is much higher, 99 point something. Whereas in many charge point operations, we're down in the low 90s, maybe even the high 80s. So operating risk remains an issue, but I think is getting there. And then lastly, and we'll talk about this, is not just the grid and network planning risks, but the transparency and predictability of this has been the big challenge. When you go and look at the site, you have no idea whether the grid connection is going to cost you tens of thousands or tens of millions, almost, certainly millions in some cases. So there is a huge uncertainty and risk associated with in your economic model of whether the grid will be able to be supplied to you, the power will be able to be supplied to you at a reasonable cost. And again, the government is working on resolving that, and Lauren can talk a little bit to that later on. So that's how you would map out the risk. On the other side of the business model, and this is using this business model canvas, we kind of mapped out what do key players look for. I'm not going to go through the detail of this. You'll be happy to hear, but a couple of things I would point out. On the left hand side, you see the partners involved in this ecosystem, and one thing that we've learned, and I learned both in corporate and in the investment space, is the number of parties involved in this space is enormous, and those players that used to work in just one industry vertical and be happy with all the relationships they had developed in that space suddenly have to open up their relationship book, if you like, and deal with a whole load of new players across automotive, across energy, across oil and gas, across infrastructure, across transport, etc., etc. So the breadth of ecosystem players in this space is much higher than in many other domains. And on the bottom right, we've talked about the risks and some of the costs. The revenue models in charge point operation in particular are as yet unproven, and people are testing various different models. But there are obviously simple ways of making money out of this, charging for your electricity and taking a margin on that. But increasingly, people are seeing that the profitability of this sector is not great on its own, and trying to find ways of improving profitability through other forms of what we call revenue stacking. So everything from a retail offer with the margins associated with it, which is a classic fuel station type offer, right through to grid shaving, power, grid vehicle to grid opportunities for the future, and a number of other things besides. So the way of making money in this varies, and that's really important from a government perspective, because we don't want policy that drives only one business model. We want to allow for innovation in this space. We want to allow for people to find different ways of making a decent return in this space if we're going to encourage that level of investment. So if we move to the next slide, one of the things we did as part of this study was we said, well, let's take a standard set of costs and revenues. So this is pure charging revenue and pure charging costs. And let's look at, for a given utilization rate, and utilization being a percentage of total available time that's actually used for charging, what sort of returns are we seeing with different types of solutions? And this graph on the left, you can see that the for a given investment, which was, I think we were using 600 plus 50,000 of investment, you can see that at we had a low, medium, and high scenario for utilization rates. Nobody makes very much money at all. In fact, most people lose money at a low utilization rate. So utilization is a critical factor in, obviously, the returns one makes in this space. But in particular, and this trend went right through low, medium, and high, what we were seeing was that the lower speed of charges were less profitable than the higher speed of charges. And that we're seeing playing out in the market over the last 12 or 18 months, 2 years. Much more investment behind high-powered charging hubs and high-powered chargers than there is in the lower residential charging space. That's not necessarily a good thing, but it is one of the factors that, as we look at mitigating and encouraging investment, we need to recognize that there's probably more work needed, and whether that's longer contracts for local slow charging opportunities, whether that's incentivization for residential opportunities. With the current set of base costs and revenues, we're going to see a bias towards high-powered charging. Now, my personal view on that is that high-powered charging provides the most convenient solution for consumers, but that doesn't necessarily solve some of the societal and public good challenges that this sector faces, and we'll come to those in a minute. If we flip to the next slide, and I'm going to keep moving more quickly, I'm going to hand over to Lauren in just a second. But the GFI in particular did a great piece of work around, what are the financial and non-financial barriers. This is in the report. The report's available on EVEnergyTaskforce.com for those of you who want to delve in a little bit more detail. But what was clear was that the overall, from my perspective, the thing that struck me was actually many of the barriers are actually not financial. They're practical, pragmatic challenges that people are facing in delays associated with either grid connections or local authority approvals, or simply just having to deal with people that aren't familiar with this space because of the nascent nature of the market. So one of the recommendations we were making was, for instance, to help with a central intelligence group that can support local authorities and regional authorities in helping them develop their infrastructure plans and help them procure and deploy, in some cases, chargers. But let me hand over to Lauren, if I can, to sort of talk through some of the other key elements of this and then take the presentation on from there.
Thanks, Roy. Just checking you can hear me, if that's all right. Excellent. So yeah, as Jonathan said, I'm a program director at the Green Finance Institute. We're a government-backed but independent organisation established about 2.5 years ago to accelerate investment into parts of the economy that need to decarbonise at pace. So I lead our coalition for the decarbonisation of road transport, and that's a coalition consisting of more than 50 members drawn from across finance, industry, academia, local and national government, civil society, with a mission to mobilise capital at the pace and scale that's needed to unlock the barriers to decarbonisation. In our first phase of work, as Jonathan said, we've had a strong focus on charging infrastructure and worked closely with Roy and the REA to develop the report that we put out by EVET last year. I'm just going to stay on this slide for a moment, and I know Roy's already outlined some of the barriers to the rollout of public charging infrastructure. And I think some of the ones I just want to re-highlight that we're still hearing now from investors in live sort of conversations just over the last couple of weeks. The first one is that utilization risk, so the risk that the forecast revenues aren't achieved, either because the charge point's been put in the wrong place and isn't used as much as expected, could be because there's a lot of alternatives in the local area installed by competitors, or because electric vehicle uptake's slower than predicted, which could be down to a lack of vehicles, changing government policy, tax, etc. With this being such a new sector, there isn't that historic data for investors to be able to get comfortable that utilisation projections from charge point operators will materialise. For some areas, such as motorway service stations or certain destinations, it's a bit easier to predict. And this challenge will fall away over time as more data becomes available. But I think what we do need to do is work together to see if there is a way of getting more data in front of investors to get them comfortable more quickly. The second one is the obsolescence risk, and this essentially boils down to likely costs. So how long will a charge point last before it needs replacing? How much will it cost to replace? Is it just a bit above ground that needs replacing? Is it the connections below? And what are those ongoing maintenance costs that impact on the cash flows as well? And then there is still, I think, a barrier of investor knowledge. So as this market is growing and maturing and the level of risk starts to decline, it's bringing new types of investors into play who have the scale of capital that's needed to accelerate the rollout. But these investors aren't as familiar with the different types of technology and the infrastructure and what they'll see as a new asset class, and therefore perceive it as more risky. And they've got a lot of questions for charge point operators and other people in the ecosystem that they need to get comfortable with. So there's definitely a sort of learning curve that we need to move through before the pension funds, etc., really start to invest at the scale we need. So I'm going to touch on the role that finance has in accelerating EV infrastructure in a moment. But first, I just want to talk about the role of local authorities. If we can move on to the next slide. Reaching net zero isn't just about the capital markets and industry. It's also about investing and working with local authorities, enterprise partnerships and businesses who've got a crucial role in designing the projects that get particular areas to net zero as quickly as possible. and making sure that that pipeline of shovel-ready projects is actually there to absorb the capital that's sort of ready to invest in the market. Something we heard loud and clear from local authorities when we ran the workshops on the barriers was the lack of capacity that they have to not only deliver EV charge points in their area, but before that delivery stage, the lack of internal resource to develop the strategies for what they need, how that fits with their wider public transport goals, and then the time and space to understand how to get that financed and implemented, alongside all the other competing priorities local authorities have today, things like the rising costs of adult social care, local roads, all their other net zero activities, at a time when spending budgets are facing real-time cuts. And failing to resource up local authorities appropriately does lead to a couple of risks. Firstly, wrong decisions can be made by people who don't have the relevant expertise or the time to consider all the options, which can lead to the wrong partners being brought in, assets going into the wrong place, or the wrong type and speed for what local residents actually need. And then secondly, the risk of poor service and maintenance contracts being put in place without the right KPIs, which means that charge points aren't serviced and stop working. So really helping local authorities to think through the right business model to have in place is key. Charge points, obviously, then, which don't work and are in the wrong place, don't give a great consumer experience. Bad news spreads fast, and this can impact consumer confidence, putting the transition to EV at risk. So one of the things, as Roy said, we called for was the funding of a central team that could help resource up local authorities. And we were really pleased to see in the government's infrastructure strategy that they ring-fenced £50 million of the levy fund to provide resources, i.e. people, to actually help local authorities develop strategies, go out and procure contracts, and then manage the delivery through to completion. And they've also promised to provide some tools, such as those offered through the Energy Saving Trust, which local authorities can use, whether that's procurement frameworks or comms tools that local authorities can use and sort of take from a website to go and actually talk to their local residents about what they've done and encourage the usage. And we were also really pleased to see that fund increase to £450 million from the original proposed sum of £90 million. But we know that more than £20 billion worth of investment is going to be needed by 2030 to finance the public charging network that's going to service the 11 million cars and vans on the road. And that figures before we even start to think about what's going to be needed for heavy goods vehicles or any hydrogen refueling infrastructure that may be needed in the future. So the public purse can't and shouldn't be expected to fund all of that 20 billion. So we do need to look to ways that private capital can be mobilised at pace and scale to accelerate the rollout of charging infrastructure. And this really needs to happen now, given that the pace that EVs are rolling out at. So we can move on to the next slide. So far, I think this morning we've largely focused on some of the barriers and risks. But the key part of what we do at the Green Finance Institute is to identify solutions which we think can help to overcome those barriers. And the work that we did last year identified a portfolio of 10 solutions we think has got the potential to catalyse investment in public charging infrastructure. Our work identified a mix of finance solutions which look to provide data, and tools which can provide knowledge. And we asked our members to rank those in terms of what they felt would be the easiest to bring to market and those which would have the greatest impact on accelerating the rollout. And what you're seeing on the screen is the result of that ranking. There's a couple of solutions on here designed to make it easier for consumers and possibly small businesses to invest in home or workplace charge points. The first of those is the ability to bundle a charge point with a car, so that you can have a car, charge point, access to a green energy tariff and insurance all in one monthly payment under one consumer finance agreement, which sounds really simple, but actually isn't possible today compliantly without multiple pieces of paper to sign. There's complexities in the Consumer Credit Act that make it really difficult for lenders to package deals up compliantly and therefore more complicated for consumers to access. And then secondly on there is demand aggregation finance, although I think there's a typo, that's what it's supposed to say. We're currently working on a pilot on this for heat pumps, but we do think there's an application for EV chargers. So this is where an organisation such as a local authority can act as an aggregator for demand. Consumers or businesses would register via an online platform, and when you hit a base level of demand, for example 1,000 charge points in a particular area, this triggers a discount for those customers who have registered. So that can give a charge point operator a source of warm leads that already have done some of the admin, for example, like uploading the photos of the fuse boxes and things you need to do. And then a finance provider can sit behind this and provide a consumer finance solution or business finance solution and come in and do the installation. So I'll just talk you through a couple of the other initiatives in a little bit more detail if we just move on to the next slide, starting with the finance ones. So I'll start on the bottom right with community municipal investments. This is a green finance product that's growing in popularity, also known as local climate bonds. So these are a type of community municipal investment that allow local authorities to identify specific initiatives in their neighbourhoods, for example, the installation of public charging infrastructure, and raise investments in increments as little as £5 through a crowdfunding model with local residents. This offers a source of funds for a local authority that can be cheaper than the Public Works Loan Board, can diversify a council's funding base, and is a really great way to engage the local community in plans for decarbonisation. Alongside Abundance Investments, we recently launched a campaign to encourage and support local councils in the UK who have declared a climate emergency to launch a local climate bond. We've already seen Islington raise £1 million through this earlier this year, some of which is to be spent on EV charging. And then Camden Council and Cotswold District Council are the two most recent ones who have gone live with their climate bonds today and are currently still open to investors. And we're now looking at how schemes such as this can be opened up to institutional investors so we can really enable that greater scale of capital to be raised. Moving to the left, we're also working on what we're calling the Transport Infrastructure Facility, or the TIF, because what we really like is more three-letter acronyms in this industry. And this seeks to bring together public and private capital to support the rollout of charging infrastructure, really focusing on those areas of market failure which aren't expected to be addressed through current available solutions. For example, areas where utilisation rates today won't give the returns that investors are looking for, which could be the more rural areas or perhaps seasonal demand, but where infrastructure is really needed to give consumers confidence to switch. So this is about trying to get infrastructure in ahead of need, but not so far ahead of need that it goes in and is obsolete before it starts to be used. What we're thinking is that public finance, or perhaps finance from philanthropic organisations, would be used to de-risk private capital. And that could be via a number of options, including revenue or credit guarantees, some financial loss against construction risk, or a first loss mechanism. Jumping to the top right, we're going to also look at utilisation linked loans for charge points. So this will be a loan mechanism perhaps available to small businesses or charge point providers and local authorities, where the repayments are linked to the utilisation rate of the charge point. But a bit like student loans, which are written off after a certain period of time if earnings haven't reached a certain threshold, there could be a point at which the loan's written off if the expected utilisation hasn't materialised. So this again can help supply of charge points go in ahead of demand, and by using private capital to provide the loan, ensures that that public capital can be retained and deployed only where it's really needed. And then finally, we've got revenue guarantees listed separately on this slide as well. And to be frank, when we did discuss this with charge point operators in a workshop, there were mixed feelings. I think investors liked the idea, unsurprisingly, as it takes away their key risk of utilisation. But some of the charge point operators were less convinced of the need for this. Mainly those who were comfortable with their utilisation assumptions saw this as perhaps giving a helping hand to companies who hadn't maybe done the right due diligence on their site location. So an alternative to this could be to consider how local businesses can collaborate and aggregate demand for charging infrastructure, come together to share the financial cost of the grid upgrades required, and then engage with charge point providers to sort of identify the demand for hubs that could service fleets as well as local residents and visitors. And perhaps if the fleets could commit to pay for a certain number of kilowatt hours of energy per month, this gives you that base level of utilisation and therefore guaranteed revenue, which can help de-risk investment in a public site. There's a bit more thinking for us to be done on that one. And then just moving on to our final slide. More broadly, we identified a number of non-financial solutions which we think can have an impact. As I said before, as the charging infrastructure sector matures, it's bringing in new investors who aren't as familiar with technology, the risks, the different business models, etc. When we've spoken to charge point operators that have been talking to investors...
Lauren?
Yeah?
You're just breaking up a little bit.
Oh,
but
sorry.
You weren't a second ago, so maybe you've moved something.
Haven't moved anything. Maybe it's that water coming in. Is that any better?
That's better. That's better.
Okay.
Yeah, brilliant.
Yeah, so as the sector matures, it's bringing in new investors who aren't as familiar with the technology and the risks and the business models. So we've spoken over the last few weeks to a number of charge point operators who have been talking to investors to raise funds, and the feedback is that they're being asked the same questions by most of them. So we're collaborating with BEMA, who are a trade association for some of the charge point manufacturers, amongst other things, on an investor handbook, which will bring together information, for example, on different types of chargers, business models, information around how they're maintained and serviced, and that can be used by credit committees within financial institutions to build knowledge and answer some of those questions up front. There's a lot of material out there for local authorities and a fair amount for consumers, but nothing that's really specifically aimed at investors. We did something similar with our coalition for the energy efficiency of buildings on the different technologies available for retrofitting homes, and that's had really great feedback. So we're hoping this will also do something similar. And we may well be coming out to some of you soon for input, because we're really keen to understand from the finance perspective, what is it, where are the gaps in your knowledge, and from a charge point provider's perspective, what are the questions that you're getting asked each time. Transparency of data then is another area that could really help to speed up investment. So too often, I think some of the business models are built using assumptions and estimates of grid connection costs, which can take a while to come back when requested. And if those numbers that come back are higher than expected, that can render a business case uncommercial, and a lot of time and effort has gone into completing that in the first place. Then a case of, do you try elsewhere, or do you resubmit it to move it 50 metres down the road? If there's more transparency about grid capacity and that cost of connection up front, so that when you're stood on a site, you know that what's below you is how much that's going to cost to connect. That could simplify things for operators and speed up the rollout. And then I think finally on this slide, while we think there's some great material out there for local authorities and others, there's still more that could be done that can add some value. So for example, procurement templates with KPIs that local authorities can take off the shelf, or comms templates for them to help promote the infrastructure they're installing to local residents, ensuring it's used. So we have obviously already got more than 30,000 charge points now in the UK, but we are seeing that uneven distribution across the UK, which ultimately risks slowing EV uptake. If we don't have sort of systems-wide approach, we do risk seeing a race that charge points are installed where it's profitable, leaving populations of the UK underserved. And that can't be allowed to happen if we're to make this an orderly transition for everyone. If we also don't think about the future landscape and the case for zero-emission vehicles of all asset classes, we risk not future-proofing today's infrastructure. So we identified technology obsolescence and stranded assets as barriers for investors, and that's why there may be this role for public capital to de-risk this in the short term. But that really needs everyone to kind of collaborate and work together. There is this wall of money that's standing ready to invest. So at COP26, the Glasgow Financial Alliance for Net Zero, I think, identified around £130 trillion worth of investment that is ready to go into net zero. One of the challenges is finding places for that capital to be deployed. So we really need to make sure that the market's ready to absorb that capital and able to scale up quickly, which means public and private sector working together to invest in skills, technology and business information, business innovation. For example, ensuring that there's enough trained installers to actually get these charge points in the ground, that they're working and that they're regularly maintained. So hopefully that's given you a flavour of the GFI and the areas we're working on. The focus of our next phase of work is to continue to co-design and eventually pilot some of these ideas with our members to test their feasibility, their impact on the rollout of public charging and the ability to scale them. So we're always on the lookout for new members, particularly those who've got capital to deploy. We're still obviously focused on charging infrastructure, but we'll also be putting a report out in the next couple of weeks on the opportunity presented by the transition to EVs to build a battery supply chain in the UK. So please feel free to get in touch via LinkedIn if you want to know more about our work on this, or on consumer finance or batteries, or even on our other coalitions. And I think that is all from me.
Thank you so much, Lauren and Roy. And apologies, we did have some problems there with the sound break occasion, but I hopefully was able to understand clearly the messages that were being provided there. The presentation and the materials will be available after the webinar, so you can review them along with getting in contact with me. Okay, so we now come to our question and answer session after two very interesting and informative presentations. Please do post your questions in the chat. I'd like to sort of kick off with one question while people are thinking about that. We've got a couple of questions starting to appear, but one of the things that has struck me being involved in this process, you know, and the whole point when the EV Energy Taskforce was set up back in 2018 was the realization that the size of the task and the lack of the number of working within silos and the lack of reaching out between the different sectors and the need to sort of break that down. We've heard a couple of times it being mentioned, you know, the lack of knowledge or the connectivity between different sectors and different partners involved, and the need to open up your partnership contact book to make those connections. And the in terms of mobilizing finance, the funds that are available and trying to find locations for them to reach out to. The scale of the pace that we've got going on in the next decade, if we're going to meet these targets, is quite large. What are the key thing in terms of getting these different sectors to work together more effectively that needs to be tackled, and is that a really key issue that has to be addressed? Pose that to Roy first of all from the investment side, and
yeah, it's an interesting question because I've seen this both from the corporate side. I also work with Accenture a couple of days a month to help them with their e-mobility strategy, and they are, and I'm sure they wouldn't mind me saying this, they are they are having to kind of redesign the way they work. This is just one example. Because they work traditionally, any consultancy works in verticals, industry verticals, and suddenly they're finding, well, hang on a minute, we can't deal with EV infrastructure through our energy verticals because we've got to work across those teams. So they're having to create convergence teams, as they call them, who are focused on bringing different skill sets, different experience sets together in one place, so that they can make decisions and they can make. So that's kind of one thought, and I think many companies are doing the same sort of thing across different sectors. I think the other thing that one has to do pretty early on when looking at partners, and this is true of any strategic partnership relationship, is figure out who's doing what, who owns which bit of the value chain, and being very transparent and upfront about that. And inevitably, in the case of EV infrastructure, there will be overlaps and there'll be opportunities for internal competition for different parts of the value. And I think the trick, in my experience, to do it is to be upfront about that and say, well, you've got a business in whatever it is, home charging, but this partnership wants to address home charging, so those two will have to compete with each other, and be kind of open and transparent about it, rather than trying to second guess what somebody else's motives are in being involved in this particular bit of the pie. So a couple of thoughts from me on that subject, but it's not easy because many of the startups are much better at this because they don't have the legacy relationships and infrastructure, and they can just get on and do it. I think the bigger players are finding this more difficult because they're not used to dealing across these verticals.
Yeah.
Yeah, I'd echo that. I think there's probably no one silver bullet that's going to answer this question, but it is about just increased communication and collaboration. And I think you're seeing that even within the large banks now. So suddenly, financing charging infrastructure involves talking to their leasing company or their fleet businesses. There's project finance involved. There's infrastructure finance. There's their public sector team to talk to local authorities. So I think not only consultants having to think differently, but even within a bank, they're all talking to each other more as well, because there's different elements to finance. And I think we're also seeing that it becomes wider than transport. We're seeing that just within the GFI, there's increasingly crossover between our different coalitions, because actually transport starts to connect with your home and what you need to move around and where you work. And for local authorities, it's a very kind of complicated picture to try and manage through.
Yeah. Okay. Yeah. It's those silver bullets are very rare to find, aren't they?
Yeah.
Only had a few more. But yes, we've got a couple of questions coming up in the chat now, which I'd like to turn to. First from Beatrice Vincent, who's asking, do you see a lack of skilled technicians to install and maintain charging posts at the pace required as a barrier? And perhaps let's widen it up a bit more and sort of talk about skills, because a number of skills are going to be needed, not just in terms of maintaining charge points, but across a number of areas. Is skills an important limitation at the moment?
I think it risks being so, and it could risk holding up the speed of rollout. I don't think it has been a challenge to date. I think there's been enough installers and people that are able to reskill to do that. Electricians can go on courses to install charge points, etc. But I think if we're not careful, I haven't yet heard that it's an issue. But we do need to, probably one we need to keep an eye on as the pace of rollout accelerates.
Yeah. Roy, been involved in developing charge points and networks and running them. You mentioned the importance of getting that availability of charge points up to the kind of level that we expect from a petrol pump. What are the key things that we need to do to achieve that? What are the next steps that are needed to get up to that 99% of availability for the charge point?
Well, a couple of things. I think the hardware itself needs to improve, or has improved, and has improved dramatically actually over the last few years. And new players coming in providing new hardware solutions, I think, has made a big difference. And the size of the market is attracting investment in that space, so that's good. And the other thing is software solutions, connectivity, and transparency. I think many of the old chargers didn't have a SIM connection even. You didn't know whether they were working or not effectively, or if you did, you only got a ping every twice a day, and it only told you whether it was connected. It didn't tell you whether the user experience was actually good or not. And now I think the kind of IoT, the Internet of Things, and the ability to do remote monitoring and predictive maintenance is making that more or uptime improvements more accessible. Now people this charge point operators have to deploy them, and sometimes retrofit, which is an expensive business. But I think the technology is really helping to improve that, and we'll see over time. The other thing that really helps here is the social media, the level of activity of consumers in this space in calling out when things are not working is much higher in the EV space than in most other spaces, in my experience. And that's a great thing for us operators, because we need to be held to account, and we certainly need to be aware when things are going wrong. So I think that's a good thing.
Yeah. I mean, you mentioned there sort of the consumer experience and a charge point. We've seen the levy fund sort of seeking to encourage contactless payments at all charge points, particularly the benefit in terms of applying for that funding. Where do you see the balance here in terms of the sort of setting standards for minimum standards for charge point improvements, improving consumer experience, or, as opposed to sort of allowing the market to compete and provide an experience price point for the competitive
Yeah,
market?
so I think, Lauren's probably got a different view from me on this, but that's fine. I'm a big fan of letting the market compete and develop innovative solutions to provide differentiated customer experiences, which then provide competitive advantage. And I think if you dumb this thing down to, one payment system, one pricing model, you're really taking that opportunity away from a sector which is not mature enough, frankly. We still need to have people exploring and coming up with new solutions and new ideas. And there is a risk that we kill that innovation by defining exactly what, and with new technology coming along, not just in the back end, which I talked about already, but in the front end, may well be that contactless payment terminals are so yesterday, in a couple of years' time, that people go, why on earth did we legislate that should be the solution? I do think, any player in this space that doesn't provide a really easy, seamless solution for people just turning up and using the machines is not going to win. That's for sure. We just need to find the right balance, and I think perhaps things like pricing protocols so that people can compare prices are really important. But defining a price is going too far. Would be my personal view on that.
I actually don't disagree with Roy, and I do, I do think that I mean, I can see the advantages to a charge point operator in having a subscription model that brings some customer loyalty in, and therefore drives business their way rather than to a competitor. But I can also see it from the other side, which is actually it's really complicated for consumers at the moment to have. When I had my electric car, I had an entire page on my phone that was dedicated to different apps to pay for different solutions. But I was someone who was not that tech savvy, but tech savvy enough to have done that. My mum's about to get an electric car, and I will just be trying to get her to go to anyone that's got a contactless solution, because there's no way she'll figure out all the different apps that she needs. So there's a balance, I think, to be struck between making it simple for consumers and the majority of consumers to use versus the business model needs of the and allowing that innovation for charge point operators. So I can see where Oza were coming from in wanting to legislate for contactless, but I recognise the challenges that's going to place on charge point operators too.
Okay, great. We've got a question here that's come from Christoph Clark, and it relates to VAT, the difference in VAT between domestic and normal VAT. And I think this also kind of links into that point that was raised about the societal interest of having on-street charging in residential areas and social equity. And the difference between the VAT you're charged on domestic electricity and what you're being charged if you're charging from a slow charging point on street. Christoph's question is, are we ever going to see this leveled up between domestic and charging on the street? And is this an important issue? Roy, do you want to?
Well, perhaps Lauren's better placed to answer this, but I think it's an important issue. It's been around for some time. It's clearly unfair on those who don't have off-street parking available, or at least home charging availability. It needs to be fixed. I'm quite surprised it wasn't in the government strategy paper, personally, because I think it's one of the things that could make a real difference. So I think I agree with the sentiment of the question, but I don't know if it's going to be solved or not.
Yeah, I'm none the wiser either, but I agree. It's an issue that needs to be looked at an appropriate point.
Okay, yeah. Changing VAT rates is, we inherit these things, and they're difficult to change once they're there. Okay, we're coming to the end, and Lauren and Mes have posted links to where the reports can be accessed if you're interested in any of the reports. I think I'd like to just finish with one final question before we close, unless we see anything pop up in the chat. And that is, we've recently seen the publishment of the EV infrastructure strategy from OZEV, which has been much awaited. Yeah, and one of the risks that's been referred to is policy risk. Does the infrastructure strategy provide the policy confidence over the horizon that we need, or do we need to go further than that in terms of providing the policy certainty that's needed to encourage the investment and the magnitude that require the coming years?
I mean, in an ideal world, that infrastructure strategy would have looked at, HGVs, heat, energy resources, and actually a whole sort of UK wide what's our energy resource going to be, therefore what infrastructure do we need, where does it need to be, how are consumers going to charge their vehicles, and what would they prefer to do, and a great big map of everything that's needed for everything going out into the future, so you've got certainty. But that's really difficult to do, and involves a lot of people working together across even more sectors than worked together to pull the infrastructure strategy into place. So I think what it has done is set out a clear kind of pathway and some recommendations for local authorities to give them the confidence and the sort of incentive to go out and install local charging infrastructure for their residents. I think it's a step in the right direction, but you can always say, well, it could have covered this and it could have covered that, but I think it's a step in the right direction.
Right. Anything to add to that, Rory?
Yeah, no, I was pleasantly surprised at what it included, to be honest. I think it hit the right notes. I mean, obviously it doesn't, a lot of it is subject to, further work, and therefore it doesn't define exactly what the policy is. It's a strategy document, not a policy document in that context. But I think it does provide the roadmap, and if I think people are getting more and more confident that this is a market worth investing in, and we're seeing that in the level of investment at the moment and the announcements that are being made over the last few months even. So yes, I think it's a positive thing.
Okay, one last question which just popped up from Christoph Clark again, and I think it relates to the infrastructure strategy, sort of highlighting sort of a minimum of 10-fold increase in public charge points over the coming decade, and the rate at which they need to be deployed. What is the key thing that we can? How can we fast track that process to facilitate that deployment? What is the key thing that you'd like to see to make that big difference?
I think I'll say again, there's no silver bullet, but I think this is about people coming together. I mean, read the reports that we've written, and I think some of the answers are in there. But this is about people coming together to break down all those granular barriers and really trying to get that money in at the scale it's needed and quicker.
I think for me, it's a practical thing about grid access and both transparency, cost, and speed of deployment. I think actually there's probably a doubling of, and I'm making this number up, but I bet it's probably pretty close. There's probably a double the number of chargers that are waiting to be deployed and have been approved this year by operators, but are just waiting because of bureaucratic and some practical grid connection issues.
And actually, that grid upgrade is a no regrets activity as well, because if it's not used for charging infrastructure, it would be used for something else. So that probably is the thing. Let's just crack on and get that grid reinforced and ready for all this electric stuff.
Right. Well, look, I'm afraid we've got no more time for questions, so we're coming to the close now. So thank you very much for participating in this webinar as part of the work for EV Energy Taskforce, encouraging investment in public charging infrastructure as part of our contribution to Green Infrastructure Week. I'd like to thank Roy and Lauren as our speakers for their presentations, very informative presentations, and to handling the questions that we've fired at them. It's been absolutely fascinating, so thank you very much for taking the time to participate today. And I hope you, the audience, have also enjoyed the webinar and found it useful. The webinar has been recorded and will be made available through the EV Energy Taskforce website, along with the reports, and also the report from GFI is available from their website. So with that, I'd like to say thank you for joining us today, and have a very good day. Thank you.
Thank you.
Thank you.
Bye-bye.